Well, cowboys and cowgirls, get your cowboy hats on because this market just went from a little pony ride to riding a bucking bronco, okay? The markets are getting torn up today. We look at the Dow down over 550 points at the moment. It's actually getting worse as I probably speak right now. The Nasdaq's down about 2.4%. Big downward day for the Nasdaq. S&P 500's down over 60 points, down over 2%. We gotta talk about my opinion on this, what I'm gonna do. The Russell 2000's down 1.8%. Now, one, I guess you say somewhat positive thing I will say about this is a 550 point move in the Dow is not as much as it once was, okay? I remember when I started in the stock market, the Dow was under 10,000 at that time. And we're going back to like the Great Recession days when we're talking about, you know, the Dow was under 10,000. But needless to say, at that time, a 550 point move was like ridiculous, okay? That was like a 4 or 5% move. Now it's still a good size move. It's still over a 2% move in the Dow, but it just doesn't mean as quite as much as it once did, okay? So needless to say, it's a bad day for the market. And especially when you look at the market, how, you know, basically all of 2019 has just been amazing so far. The end of 2018, we had a massive amount of volatility. The markets got really ugly. They dropped in a significant way. It went from like Dow like 26,000 to like 21,000 in a very short amount of time. And so needless to say, coming into 2019, we've just been pretty much up and away. We haven't had much volatility, and all of a sudden you get hit with something like this. And this was what was supposed to happen yesterday. It trips me out. The stock market is so unpredictable. This should have happened yesterday. That's when the news broke. Like everybody knew everything that you knew basically today, you knew yesterday, okay? So the market should have been down this much yesterday. It literally didn't make sense yesterday, okay? Personally, I'm getting absolutely tore up today. I mean, I would assume we're down 5 figures, you know, somewhere around there if we look at all my accounts, but I'll just share with you guys the public account, which is available for everybody in my private stock market membership group. Link in the description, by the way, if you want to join that. But needless to say, we're getting torn up in this account. We're down big, you know, $7,700. That's the worst day in this account in a long time. It's ugly. Probably worst day since honestly like December. And if we look at some of the positions that really catch my attention today, Alibaba down another 4+%. Alibaba had a bad day yesterday too. It way underperformed the market. So Alibaba's just getting torn up. You know, basically anything in China is getting torn up right now. Skyworks Solutions is another one that catches my attention. They do get a significant portion of their revenues and profits from China. That one's down nearly 4% today. And then Tesla's another one that catches my attention. That one's down 3+% today. So all three of those are the ones that really but I mean everything across the board is just red today. Even my beautiful Elfie, which was up originally in the market, is even down today. When Elf is down, that's when you know the market's bad. So needless to say, it's a rough day. You know, the account's still up $45,000+. We're still up, you know, 21%. So it's not the end of the world, obviously, and that account's still, you know, the markets would have to completely crash for like the next month or two for us to lose all our gains. But $7,700 is not fun to lose in one account, okay, in a given day. Now, if we look at some of the stocks I keep track of with my stock tracker app, I track about 85 stocks, somewhere around there. If I look at like the top 5 biggest losers today, most of them, I think almost all of them have, you know, significant portions of their revenue come from China. JD.com's a straight Chinese retail play. Maxim Technology as well, they get a significant portion of their revenues from China. Alibaba obviously is a Chinese giant over there. Limelight Networks, not sure how much of a percent of their revenue they get from China. I'm sure it's pretty significant though. And then Wynn Resorts, obviously their biggest, you know, profit makers are in the Macau region of China. So needless to say, I mean, you look at what stocks are really getting hit the hardest. They're the ones that have Chinese exposure. Everything's pretty much getting hit today, but the ones that are getting hit the worst, obviously, is anything in relation to China. Any business that gets, you know, 30, 40, 50% of their revenues, especially some of these, you know, JD.com, Alibaba, that get, you know, 80, 90, 100% of their revenue from China. Anything related to China is just getting hammered right now. And it got hammered yesterday and it might continue to for the rest of the week, okay? If we look at the positive side, like of 85 stocks I track, I could only find 5 that were actually, well, Pandora is not even a public company, so I have no clue why that one's even on there. But, I mean, there's almost nothing positive today. Ferrari is the only stock that's market's having a good day. That one's up about 3.6%. And who knows why Ferrari is up. I thought the Chinese like to buy Ferraris. I don't know, okay? So if we look at the public count, let's just talk for a moment. Let's think. With the market dropping significantly today, am I going out there and starting to deploy a ton of money into the market? And the answer is not really, honestly, okay? Here's why. The chances I buy a stock that I've already bought and my cost basis is up, let's say double-digit percent, is a very, very low probability. It is possible, but it's a very, very low probability. And so if we look at some of these positions here, Alibaba, we're up, 13+% still, even after the big drop yesterday and today. Am I running out to buy Alibaba up 13+% on cost basis? No, I'm not. Cirrus Logic, down what, $850 today? Am I running out to buy that one up 23+%? No. Elf up 56%. Am I going to run out and buy some Elf today? No. Eli's a possibility. So Facebook's up 23+%. Am I going to run out to buy Facebook? No, not really. Whirlpool's up over 13%. So all those positions that are up double-digit percentages, I can personally just not see myself buying those stocks. I almost never buy stocks that I've already bought previously that are up double-digit percentages. It's just very rare because at that point, I'm just not getting as good of a value as I once got with that stock. And so I'm not as interested. It's kind of just becomes a hold stock for me at that point in time. Doesn't mean I'll always, I'll never buy a stock up double-digit percent, but it's extremely rare, okay? So if we look at the only 3 stocks, like for instance in the public count, that are, in a position that they're not up, double-digit percent, we obviously see Eli stock, that one's up about 8% or so. So that one's a possibility that I could, deploy some money into this week. It's a possibility, not sure about it. Skyworks Solutions, we're up 9-point-something%, but pretty close to 10% on that one. So that's certainly a possibility. They got a, huge opportunity in front of the company in the next 5G wave, which is coming over the next, basically year or two, is going to start up in a massive way, and that's going to run for at least 5, 10, 15 years in the future. So that's a potential big play in 5G. And then Tesla stock is probably the main one, honestly, I'm more interested in acquiring shares at this point in time. If we look at Tesla stock on this one, it's, we're down on the position. So not only are we not up, but we're actually down in the position 3.3%. We own about $14,800 worth of shares in this account. I would love to get that up to at least probably 25,000. So which means I could put at least $10,000 or $11,000 more into that stock, maybe get us to somewhere around 100 shares would be very nice. So if I'm looking at that count, honestly, the main position I'm personally interested in buying right now is Tesla shares down here, because I think the risk reward is definitely in my favor in regards to what the potential reward is versus the risk I'm taking in that stock. So that's probably the main position I'm going to be buying if the stock market continues to be weak. By the way, the VIX is the only really good investment you could pretty much have today. The volatility index is up 38% today. Unbelievable day for the VIX. The VIX has been horrible for basically pretty much all of 2019. There just hasn't been a lot of volatility. It's just kind of been stock market up and up and up and up and up. And finally, the VIX is moving huge. And thinking back now, that would have been a great play as of yesterday. With the markets hardly moving yesterday, and bouncing back, you just kind of like could feel that, we're probably going to get hit later in the week. I think I even mentioned in my video yesterday that, it was very possible that as the week went on, it could, kind of get rough and whatnot. And so I personally think, like, with this whole China-US, trade deal, how ugly it's gotten, I don't think this is going away anytime soon. I think we should look for volatile markets until we get some clarity about a deal possibly happening. It's not looking very good from my understanding. China's still going to send like 100 people over here to try to work out some things in the deal, but all of a sudden they've backtracked from my understanding on what was, kind of agreed upon that they were going to do. They kind of renegotiating things, and Trump's in a situation where he doesn't want to renegotiate things, and so we're in a real pickle now at this point in time, and this could get really ugly. And honestly, those tariffs on China, it's not going to be a good thing for a lot of the exporting that China does overall. I think it's just the export numbers are going to go down and down. That's going to hurt, China's economy more and more. And I think if you're looking for company numbers, any type of business that gets a significant portion of their revenues and profits from China, I just think it's probably going to get a lot worse before it gets better, unless we get some very quick trade deal before those tariffs actually go into effect. And, if this thing drags out for another 3, 6, 9, 12 months, a lot of earnings are going to be missed from a lot of massive companies that get significant portions of their revenue, and profits from China. The good thing is there are some businesses that their businesses in China are almost non-existent. I'm talking about Facebook. Facebook's business in China is non-existent. So that's my biggest investment. I love the fact that like it's crazy Facebook stock even gets hit. It's just kind of because every stock gets hit when the market's going down. But you look at a company like Facebook, their business in China is non-existent. So, it's kind of a bad thing because you wish a business could be in China, and all those potential people using Facebook or Instagram or WhatsApp or those different products. But at the end of the day, it's a good thing because you got this trade war going down right now. Every company that has exposure to China is being hurt. Google, for instance, another business that almost has non-existent revenue and profits from China. So you have some businesses that literally almost cannot be hurt from China right now, but it's very few and far between. A lot of public companies out here, Apples of the world, these type of companies get 10%, 20%, some even 30% plus of their revenues and profits, even though they're American companies. They get significant portions of their revenue and profits from China, and that's going to cause a lot of volatility because these earnings are not going to be hit. If those 25% tariffs, come into effect, I'm telling you, a lot of these companies are going to miss in a massive way over the next few quarters, and especially if those tariffs stay on. So we'll have to see what happens, guys. Expect more volatility, expect more big market moves. I'm hoping the market continues to move down a big way. I would love us to get back down to that 21,000 level that we hit in December or somewhere around there. I would love to load up on stocks again like I was doing in November and December. We'll have to see if it happens. It's wishful thinking, but I don't, who knows, guys. But anyways, let me know your opinion down there in that comment section. As always, don't forget to smash that thumbs up button. Thank you for watching and have a great day.